Nothing in this recording is intended as investment advice, and the people in this recording may hold positions in the companies they talk about. Do not make any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to Zak's Traders Cafe. Today I'm joined by Alexander Selegenev, who is Executive Director at TMT Investments. Hi today, Alexander.
Good morning, Zach. Nice to meet you.
Right, I'm just discussing offline the perils and joys of being an investment company on the London market. I wanted to start and just sort of say, as a general thing, investment companies tend to not be they tend to be valued according to the lowest possible metric that the market can come up with rather than the highest. If there are many investments in the companies, investors tend to sort of focus on the ones which are not doing so well rather than the ones which are. And then you also have issues such as you make an investment in something maybe fantastic, but then you've got to raise money or potentially raise money to follow on in that investment so that you're not diluted, but obviously you dilute the shareholders. So what's different about TMT, and in what way are you better than the rest is probably my first question.
Thanks, Zach. As a quick introduction, TMT was founded almost 15 years ago. In December, it will be our anniversary. Specifically with a wide remit to invest internationally in venture capital opportunities. Hence the name TMT, Technology, Media and Telecoms. Since then, we've invested in over 100 companies, primarily in the US, Western Europe, the UK, some very successful places like Estonia, and grew a few unicorns in our portfolio, had a number of very successful exits with huge multiples, like 50 times our investment, 23 times our investment. The most successful investment so far has probably been Bolt, which I'm sure pretty much everyone knows about. It's a competitor of Uber in London as well, in the UK and in hundreds of other countries. And basically, we think we've been quite successful. The IRR since inception has been over 14%, over a dozen of exits. And the existing portfolio valued at over 200 million. And we are currently trading at a 60% discount to NAV. What else is different for TMT? We think we are very conservative in a good sense with our valuation approach. Our portfolio as of June 2025 was valued mainly on the back of actual transactions. Only 15% of the portfolio value was valued on the back of multiples. In other words, the value of the portfolio is very, very transparent. We don't try to justify valuations using fancy multiples. We all know how easy it is to choose convenient multiples when required. So our absolute preferred approach has always been to use actual transactions as a guideline to revaluing our companies. And that's why we've launched this small share buyback program just yesterday. Started buying our own shares because we think it's not just a good deal for the shareholders, but also a wise investment opportunity. Because honestly, it's very hard to find any new investment opportunities which would be more attractive than buying into existing successful star performers like Bolt, Sandbird, PandaDog, most of whom are profitable already and growing at very significant rates at a 60% discount.
Right, so you're basically you're going to be buying paying 40p for a pound or something like that. So it's a good deal for you. So you're putting your money where your mouth is on that front. But it is, I suppose, it is underlining that the London market or the market in general, it does take a very risk-off type of view. Do you think that part of that is the just the diversification that sort of, which is great in terms of, risk, but also the market sort of says, well, you're sort of you've got so many things, so many irons in the fire, you're actually diluting the upside as well.
We think there are a number of factors, to be honest. First of all, of course, the general market volatility. As you've seen, the last 3 years have been very volatile, and people in general, investors, are kind of skittish very often. I mean, everyone prefers some clear-cut deals, ideas. In our case, one would need to, of course, do a little bit of research into our portfolio to realize the hidden value in the portfolio. As I mentioned, I mean, currently our market cap pretty much equals the value of our Bolt holding. Bolt is about 40% of our portfolio value. Our valuation of our holding in Bolt is based on the actual partial cash exit transaction that we announced in the interims. So the valuation is absolutely verifiable based on a cash exit. So would seem pretty safe. On top of that, if you include our fully liquid holding in a publicly traded NASDAQ quoted Backblaze, a cloud storage company in the US, about 12 million worth of stock ready to be sold anytime. And as I mentioned, some other very successful companies, PandaDoc, which pre-crisis achieved a 1 billion valuation, Sandbird, which is a platform for scents, subscription model for perfumes and other beauty products, over 1 million customers in the US, keeps growing in double digits, has been profitable for the last 2 years at least. And you can imagine that to realize that hidden value, people need to be kind of into our story a little bit. But with all this stuff going on the macroeconomic level, for the local investors, the budget worries in general, inflation, all the usual macroeconomic pressures. And then, of course, the capital outflow from the small caps that everyone has been talking about for months now in the UK. Makes it a little bit more difficult to, of course, get people interested in investing in smaller cap stories like ours. But once again, when we speak to investors regularly, everyone understands the logic. Everyone understands that there probably needs to be a catalyst, like, for example, Bolt announced on a number of occasions their plans to go public as soon as the markets are more or less stable. But we know that, I mean, I'm pretty sure that once Bolt announces their plans, we will get a very significant spike of interest in our shares. But until then, people are probably judging on the timing of the potential IPO, the timing of other potential exits that we might have from our portfolio. And only the bravest investors are kind of accumulating our shares at these very attractive low price levels, betting not on the immediate return, like 1 or 2 months ahead, but playing a slightly longer term strategy, which is consistent with venture capital and private equity anyway, looking ahead for 1, maybe 1.5. I think that's mainly why the share price has been a little bit depressed.
But I think, I mean, the main premise with your company is, it's venture capital. It's been one of the hottest areas. Venture capital has been, it's sort of almost overtaken the stock market in terms of liquidity, opportunity, and like the names in Bolt and Uber and Revolut and all the other companies like that, which have been heroic. So the message to message to potential shareholders has surely got to be, we find the opportunity, so you don't have to. I mean, we know we're the experts. We've already got a proven track record, and we're trading at such a discount as well that there's the downside from these levels can only be regarded as limited.
Absolutely, that's exactly the point. You've highlighted the key messages there absolutely correctly. Our IRR of over 14%, including the last 3 difficult years for venture capital, is honestly quite exceptional. If you compare that number to the stats produced by the smaller funds, venture capital funds, we are firmly in the top 5-10% performing funds on that metric. And we've paid special dividends before on the back of significant cash exits. And the intention, of course, would be to keep doing that as soon as there are more successful events like that. And the message is, yes, exactly that. I mean, our team has a combined track record of decades and decades of experience of building startups ourselves, investing in dozens of different startups, and building internet companies and software companies. So it's a huge, huge source of expertise, which one could rarely find in a single person. If you try to identify startups yourselves, investing through various crowdfunding campaigns, it's very difficult. It's very challenging. The availability of information is difficult. Access to deals is even more difficult. And more importantly, diversification. I mean, in our case, we have over 50 companies in our portfolio, ranging from early stage, mid stage, and including some well-developed, sizable pre-unicorn type companies. So it's a very, very convenient way of getting exposure to this sector, especially at such a significant discount.
Alexander Selegenev, Executive Director at TMT, thank you very much indeed.
Thank you, Zach. Thanks for your time.